I just realized I probably ought to redo my introduction because I got a beard now and I'm beardless in my intro, but I don't want to have to edit that all over again, so it's probably going to stay like that for a little while. But you know what I feel like doing? Let's have a different background today. How's that? I'm Andrew with Investors Hub, and today we're going to be talking with Matthew Peterson. He is the managing partner at Peterson Capital Management. He's got 20 years of finance experience, and we're going to be talking to him about what's going on in the market right now with meme stocks and GameStop. And he's also going to share with us a way that his firm has been making some money recently, and a way that retail investors might want to get in on too. Please note that our videos are not designed to be direct investing advice. We're here to gather the perspective of different investors. Our channel and our content should just be one stop on the journey of trying to find out where to put your money. So talk to me a little bit about the rise of meme stocks and what kind of market conditions are in place right now to facilitate that.
Andrew, that's a great question. We've seen these forums like Reddit pop up, and what's really happening here is that there's a lot of speculation going on in the marketplace at the moment. I think that a lot of the long-term value investors have kind of been squeezed out over the last decade or so, and there's been a new rise of sort of short-term thinking. And frankly, with platforms like Robinhood and others that are doing sort of offering free fractional trades, which on the surface is a very good thing for Main Street, I think what it's often doing is it's sort of accelerating the use of sort of high frequency trading tactics on Main Street. And so, these forums are getting attention and people are speculating. I think we haven't seen a sustained long-term correction in over a decade, since 2009. And that's allowing some new retail investors to really get behind these forums and push these prices around.
So who do you think is going to be the next meme stock, or is it going to be GME Forever?
Oh, that's an interesting question. I'll tell you, I was driving through southern Texas just yesterday, and I saw on a billboard GME stock to the moon. So it's pretty interesting what's going on. I think for it to be successful, for the initiative to work, I do think that these Reddit forums need to focus on single areas where they're targeting. But this is an engineering problem. This isn't a finance problem. So you're looking for situations that have high short interest, the ability for a short squeeze, and we'll see, what happens here in the long term. I think it's pretty speculative in nature. I think the only people that need to be getting involved are the people that can lose the money that they're putting into these things. But from there's talk of things like AMC, there's talks of a few others, but I think GME is going to be the focus for a long time.
So rising bond yields have been the focus of finance for the past couple of weeks. Do you think that those are going to continue to rise? And how much do they impact these, more speculative markets?
Oh, Andrew, that's such a great question. We're really long-term thinkers. So over the course of, say, 5 years or even a decade, I totally expect that bond yields will rise. Okay, we are at maybe for 40 years, we've seen yields compress. And over the long term, I expect that those will widen. And frankly, you have to think of anything in finance as opportunity cost of capital. So as yields rise in bonds, that's going to become more of an interesting opportunity for other capital that is in other asset classes, whether it's speculatory classes, meme stocks, maybe things that are things like Bitcoin. But ultimately, these are really different classes. I don't think the yields have risen nearly enough to become attractive at this point, especially for somebody who's more interested in these forum-based meme opportunities versus, like a fixed income bond portfolio.
So we chatted beforehand, and you talked to me about how your firm is capitalizing on market volatility by harvesting premiums off of options. So talk to me a little bit about how you guys are doing that.
Yeah, thanks, Andrew. So we have, I run a concentrated long-term value-based portfolio. So we're looking for the very best business opportunities run by the greatest management team selling at a great price. And through the process, we've perfected this way of moving in and out of the securities for better than retail prices. And it's fairly simple the way I describe it, but ultimately what we're doing is we're writing long dated put contracts as a tool to enter the security. So if we find an opportunity to buy a company that's, say, growing and worth 200, that's selling in the market for 100, we can go out and sell somebody a contract to commit to buying their securities for $100 over a period of time. And they pay us for that commitment. That's the premium that we are paid. So during times of great volatility, that premium goes up significantly. During times of uncertainty, the premium goes up significantly. So this happens to be one of the greatest times since the inception of our fund in 2011 to be getting this IRR out of these premiums by selling long-dated put contracts as a tool to own the equity. Well, I should be clear that this is very different than the more common uses of these products, the more speculative nature or the trading aspect. We are truly interested in owning the underlying security and using this product as a tool to have somebody put that security into our portfolio. So it's a very, very important aspect of this is that we want to own the shares.
So is this something that retail investors should be looking at doing?
So it is something that it can be very valuable for a retail investor portfolio. Usually the one aspect that's difficult is that each option that you sell is worth 100 shares of stock. So if, for example, you sold it on one of the most famous securities, Berkshire Hathaway, the share price is somewhere around $250 for a B share, the smaller class. And so to sell one put would cost ultimately, you'd be exposed $25,000. So if you're running a diversified portfolio, you need to have a little bit of capital to back things up. But, we were just talking about the meme stocks. If you want to own GameStop, this might be a way to buy the security rather than just buying it in the marketplace.
Does anyone do options on Berkshire Hathaway A? Are you even allowed to do that? I'm not sure.
Well, actually, this last year, we actually, yes, we do options with Berkshire, and it's Berkshire B, actually. So the A's don't exist. So the Chicago Board of Exchange determines which contracts are available, and it requires a bunch of quantitative aspects like certain levels of volume. And so the A's don't fit the criteria, but the B's do. So we are out, and the B's and the A's are exactly the same. The B, 1,500 B's is equal to an A. So you can go out and write these contracts on a B. And in fact, this last year, as markets were falling, we went ahead and did that. And believe it or not, it's so lucrative on a company as secure as Berkshire Hathaway. We picked up a premium that was a 24.5% IRR. And again, this is in basically a zero interest rate environment. Our counterparts are willing to pay us almost 25% for a commitment to buy Berkshire Hathaway.
So, any final thoughts?
Well, yeah, I guess I'll leave it with this, that this is just, I think, an extraordinary time. It's a great time to be a value investor. A lot of value investors have sort of shifted their mindset to some degree, but there are some great opportunities out there for bottom-up stock pickers. And I think using volatility in your favor is a huge advantage at the moment. Again, my name's Matthew Peterson. I run Peterson Capital Management, and you can find more information online at petersonfunds.com. Thanks a lot.
Thanks for watching. Be sure to like, comment, and subscribe. You can also follow us on Twitter at ihub_vision, and I'll see you again soon.